Brothers in the green today after reaffirming its outlook, even as the housing market faces some serious headwinds. Our Diana Olick is here to break it down for us. Morning, Diana.
Good morning, Carl. Yeah, Toll had a strong beat in Q2, but Q3 is in focus now, given the new uncertainty over tariffs, stock market volatility, and higher interest rates. So I want to get right to what CEO Doug Yearley said on the call this morning, namely that so far they have seen a tougher spring season.
We experienced softer demand in the second quarter due to a decline in consumer confidence driven by increased economic uncertainty. These conditions have continued into our third quarter. In this environment, we believe prioritizing price and margin over pace makes the most strategic sense.
And Yearley added that they are now reducing spec home starts because, quote, that is the smart way to run this business in the current environment. He noted that they're very pleased with how well they were able to sell specs without larger incentives in the previous quarter, and he said that helped margins. Now, the average sale price of new orders in the quarter was $983,000. That's compared with $1 million in the previous quarter. The closing price was down 7% from the year before. Yearley called the near-term outlook cloudy, given affordability challenges, but demand, he said, is positive for the luxury niche, and 70% of business for them is move-up and empty nester segment. Also, he said about 24% of Toll buyers were all cash. That's up from their average about 20%. And for those who did use a mortgage, LTVs on those was 70%, so that is big down payments. Toll has seen upticks in move-up and first-time luxury buyers, but a recent decline in empty nester buyers. Some of that might have to do with those empty nesters not really wanting to sell their current homes into this market. Guys, obviously, they also have very low interest rates they don't want to lose.
Speaking of rates this morning, Diana, what's the latest on the 30-year? 6.9 or so? And we had applications down across the board?
Yeah, 6.99. I mean, it's been right around that 7% range, and we did see a big bump up from last week. So last week, we actually saw a big decline in mortgage purchase applications, down 5%. And that just shows you how sensitive today's buyers are. Maybe not the luxury Toll Brothers buyers, but the average buyer who sees just that small tick up in mortgage interest rates is not going to be able to get back into the market because, you know, they have so many other issues going on with the economy. Morgan?
Okay, Diana Olick, thank you.